Hello, ladies and gentlemen. I am not sure how this is going to turn out. I've never tried this type of camera before, and, well, I've recorded a few shows in the car back maybe a while ago, maybe a year ago or something with Pop, or maybe a year and a half ago, where we did food shows, you know. Today, this is the first time I've actually recorded like a show about cryptocurrencies or anything like that. Today, what I'm going to talk about is Bitcoin itself, and the stock market. Notice some parallels between Bitcoin and the stock market. I think what's going to happen now is that the Bitcoin is going to do exactly the opposite of what the stock market's doing. We've seen the stock market fall off over 700 points today. That was a big one-day fall off in the stock market. And I think there's more to come. Could bounce back a little bit tomorrow, but that's just people buying the dip. They think it's a bargain. It's really not right now. If they studied the geopolitical structure of the world right now, and if they were to study what's really going on within the financial system, they would sell like mad. Because when they start to figure it out, all the different problems we have in a lot of different places in the world right now, and the world's turned angry. I'll call it that. It's turned angry. It's particularly angry about trade right now. We got Japan and South Korea they're in a trade war. There's no other way of putting it, but it's very deep-seated, and it's over technological trade, and it's intensifying. We got problems in a lot of other places. We got the Brexit, which is a huge problem, and my stomach's growling. I ate a chunk of papaya about 2 hours ago. It was a big chunk, I put some sugar on it and everything, and it's just wrecking havoc with my stomach. Anyway, getting back to what I'm talking about. We got the Brexit, and this is I can see this coming. This is going to be a huge problem, the Brexit. These world problems now are affecting Bitcoin the exact opposite from how they're affecting the stock market. And the reason why is the worse the world problems get, the more it's going to challenge these fiat currencies. Now, as these fiat currencies are challenged, the big challenger out there is gold and Bitcoin. Gold and Bitcoin kind of are going hand in hand together, It's a very interesting situation, a very interesting time that we're living in. And, Bitcoin wouldn't be worth anything, really, if it wasn't for the fact that the world's financial system has been mismanaged so bad. And this has been the driving force, or the motivating force. Bitcoin, as a currency, is deflationary. And all of the fiat currencies are inflationary. And so it's kind of like matter and antimatter. Do you remember Star Trek, and they had the antimatter reactor? If the thing broke open, it would blow up the whole universe, or blow up a big chunk, Antimatter, when it comes in contact with matter. Well, that's what Bitcoin's like. It's like the antimatter of the financial world. Same way with gold, And they've tried to suppress gold for so long, but now something curious is happening right now. Right in this situation right now, about gold. The thing is they've suppressed gold for a long time because they don't want the dollar to look bad. They want the dollar to look good. They want to keep strengthening the dollar. All of a sudden now, just starting now, the exact opposite's happening. The powers that be are now going to want to weaken the dollar because we got a trade war going on with China. China's just suddenly decided to devalue the dollar. And so now, not the dollar, I mean the yuan. They've devalued the yuan. Excuse the mistake. They've devalued the yuan. Now, this is a trade war. And so now the dollar needs to be devalued. So what's the better way of devaluing the dollar than to release gold from its shackles? If gold goes up too much, we'll see silver start to follow gold, you know. And we're going to see gold and silver going up. And in this type of environment, it's very favorable for Bitcoin and the cryptocurrencies as well. Strong, profound inflation is coming. We're going to see inflation something similar to what we had in the 1970s. To be honest, in this kind of a situation, it's really smart to hold gold and Bitcoin, And, if you want to buy some Litecoin, it's very similar to buying silver. So, Litecoin is silver to Bitcoin's gold, And so, what we're moving into, we're going to see sudden shocks to the economic system coming up over the next number of months. This was a big shock that caused the stock market to fall 700 points in one day, over 700 points. But we're going to see more systematic shocks coming to the system that are going to have a profound effect upon the price of Bitcoin. I'll tell you, I wasn't far off. I told you guys, I said, I figure after they cut the interest rates, Bitcoin's going to start to go again, going to start to move, And they cut them, and nothing really happened for a few days there, And I was like, well, I was waiting for it. I knew it was coming, and now it's starting, So I figure this move is probably going to take us up to around 16,000. Gold's on its way to 1,500. It's going to pass 1,500 pretty soon. I figure as soon as gold passes 1,500, I think silver's going to take off and go up to probably $17 or $18. So we're in the right environment now. We've changed. We were in the wrong environment there for the longest time. Especially when the Fed went into their tightening program. Quantitative tightening, and raising interest rates was just pure hardship for cryptocurrencies. Well, we saw the decline from $20,000 all the way down, to what, $3,500, and it was a massacre, and it occurred parallel to quantitative tightening and raising interest rates. Now we're seeing the whole system changing direction. You can bet your bottom dollar we are headed toward more quantitative easing, and this time it's going to be unsterilized. Now, what I mean by that is the first rounds of quantitative easing were sterilized. What unsterilized is the money is basically monetizing your own debt at that point. That's where we're headed. They're going to monetize everything. You'll see the Fed, in the end, buying the stock market, too. They're going to buy everything that they have to buy. They're going to do what they have to do in order to keep blowing up this expanding credit bubble that they've got going. They cannot let it contract. They just got to keep making it bigger and bigger and bigger. Where all this ends, it ends in a hyperinflation. Or, it's very unlikely that they will let it contract, but if they did let it contract, it would end in a total disaster. Where, that's why I don't think they're going to let it contract. I just think they're going to keep blowing it up and blowing it up and blowing up. And ultimately, if they do that, we're going to end in hyperinflation, because there certainly comes a point, at a certain point, when you go into the grocery store and you see the hamburger is $34 a pound, where people suddenly say, hey, you know what? My dollar's not buying anything more. Why am I keeping my dollar in the bank? There's negative interest rates now. The bank is charging me money to keep my money in the bank. They're sitting there thinking the wheels start turning. It takes a lot for these people that are stuck in dollars and don't think about cryptocurrencies or anything. Sorry guys, the cam cut out 10 minutes. I was just on a roll too.
Sorry about that. But anyway, I'll continue this conversation later, and next time I'll try to find out why that cam quit at 10 minutes. Maybe they all quit at 10 minutes. I don't know. Well, thank you for listening. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye, guys.